Hello and a warm welcome. You've joined us here on ET Now. I'm Ashesha Advaryu, and first up, let's put the spotlight on Inox India. This counter reported its numbers a couple of days back. Revenues grew by about 25% and margins too came in at about 20.4%. But what's the outlook for FY27? To understand that, we are now joined by the CEO of the company, Deepak Acharya, who's now joining us. Mr. Acharya, afternoon. Thank you for joining us today. Given the strong growth that you have reported in the fourth quarter, both on the revenue and EBITDA front, how sustainable is this high rate of growth that you've reported, and what drivers will ensure that this trend continues in FY27 as well?
As you see, our Q4 results were fantastic, and even the entire year we had a very good results, especially from the revenue point of view and margins point of view. And we are quite confident that whatever results we have shown in Q4 as well as the FY26, the same growth story or slightly improvement will be possible over the next year. And there are many key drivers which are working on our revenue. There are many areas on which we are working, especially the aerospace sector, the steel sector, the healthcare sector, LNG on different areas such as marine fuel tanks for the ships, automotive fuel tanks for the trucks and buses, and small scale LNG terminals. And on cryoscientific, on big science projects, we are working. And on big science projects, there are very few players in the world who can really deliver the products what we are manufacturing. And wherever we have worked for projects like ITER, our customer is extremely happy with the quality and the delivery and the timeline we have achieved so far. So we are getting quite repeat orders. So we are quite confident that growth of around 18 to 20% on revenue and around 21 to 24% on the EBITDA margins will be maintained for coming years as well.
And there is also margin contraction on a year-on-year basis in the fourth quarter. Does the company pass through the hike in raw material cost, or will it be absorbed by the company?
Margins, though you have seen slight reduction, maybe very few basis points, but we are quite confident that we will maintain our margins going ahead in coming months or coming year. Basically, this is a factor where we have the two product range we call the standard products and custom built products, and their ratio is very important. So slight margin variations is possible depend on the product mix. And going forward, we are confident that we'll maintain the margins within 21 to 24% as per our guidance. On the steel part, what you rightly asked the questions, it's a area of concern for everybody nowadays. But we are very much protected to that extent because we have two types of products. One is standard product where we stock the material and we know what price we have bought. So accordingly, we price it to the customers. And for the custom built projects, we book the material once we get the order immediately, so that there is no effect of price variation on the steel component. At the same time, when we have the yearly contracts with multinational companies, we have the price escalation formula, which is worked out based on the index, which is like MEPS index in case of a raw material. So all the three cases, we are protected from any escalation in the prices. And whatever the price increase is there, it is passed on to the customer. So we are quite protected.
And Mr. Acharya, what is the execution timeline of the current order book, and what is the future order pipeline looking like?
We have almost end of March, we have around 15,014 1514 crore pending order. And going forward, we see a strong growth, especially for the CapEx requirement by the various industries, especially the aerospace, steel industry, the semiconductor industry, LNG equipment for the fueling stations, automotive sector, marine sector, and the cryoscientific area where the big science projects are going on in the world. So we are quite confident we'll maintain our ratios of increase every year of 18 to 20% in revenue, at the same time around 20 plus on the order book. And we hope that by end of the year, we will have at least around 2,000 crore plus order book for FY27.
And Mr. Acharya, exports accounted for nearly 61% of your total revenue. How is the demand traction in the international market, and what are the specific geographies with higher potential?
Our revenue comes from almost 60% from our export market, and we cater more than 65 countries all over the world. The major areas where we cover is US, Europe, South America, Middle East, Southeast. These are the major part of our businesses, and we have some operations in our South America in Sao Paulo also. So these are the major areas where we have orders from the export market. And going forward, we see there are a lot of projects which are coming up in IG as well as LNG, and we see a lot of tractions from the new emerging fields in clean energy and such as LNG and even the nuclear as well. So we see that there is a good capex requirement coming up in the market in FY27 and going forward as well. So we are quite happy with the orders what we are getting, and our efforts in contacting the new territories and the new customers for the new applications. So we are quite confident.
Okay, so that's the outlook for FY27. Mr. Acharya, thank you so much for taking your time out and joining us here on ET Now. But on that note, we need to slip into a very short break, but we'll discuss many more buzzing stocks on the other side of the break. Don't go anywhere.